Hello everybody, in this special weekend episode we are going to talk about the collapse of Silicon Valley Bank. Well, the bank grew 3 times between 2019 and 2022. Then how did it collapse in less than 48 hours? Before we continue with the main story, a quick disclaimer. Going forward, every single weekend I will come up with these special episodes where I will go and dissect the topic in detail. And I believe the length of the videos might be a little longer than 8 to 10 minutes, but the learnings would be much greater. You do let me know if there is any feedback with respect to this format, and I'll be more than happy to consider the feedback and tweak the format accordingly. Now let's jump into the main story. Silicon Valley Bank has unraveled and has now died in less than 48 hours. This is the news that is coming out.
California regulators have closed down Silicon Valley Bank to protect insured depositors. The State Department of Financial Protection and Innovation says insured depositors will have full access to their deposits no later than Monday morning. SVB
that Silicon Valley Bank Santa Clara was closed today by the California Department of Financial Protection and Innovation, which appointed the FDIC, the Federal Deposit Insurance Corporation, as the receiver.
I talked to multiple experts over the last 2 days and the consensus is pretty common. This is not a banking failure, rather this is a confidence failure in the banking institution. Now, how did we end up there? To understand the story, we need to look at 4 things. Number 1, what is Silicon Valley Bank and what is its USP? 2, what is the trigger for this entire collapse? And also, what are the potential next steps, including can something like this happen in India? Finally, what are some of the takeaways that you and I should take from this entire scenario as business students? So let's start with the first one. What is Silicon Valley Bank? Silicon Valley Bank started in 1983. The entire premise of the bank was to support technology companies and tech startups. To think about it, it supports now more than 50% of the venture-backed startups in the entire US. That is how it is deeply involved in the ecosystem, the startup ecosystem. That's it, that is its niche. It is not small, but it is very focused. $200 billion that it is managing on its balance sheet, but it is focused on one single ecosystem. And that is the reason why it was never under the radar. Even when this was happening in the last 2 days, Wall Street Journal and the Fed did not bother too much about Silicon Valley Bank at the start because they did not even know that, hey, this was such a big bank and that was operating in such a small niche area. It's located somewhere on the West Coast, not the East Coast, where majority of the action happens in the US. Now, if you think about it, in 2020 and 2021, there was a lot of money that came into the system. Because of COVID, not a lot of cash was there out in the system, so government has pumped money into the system and that led to excess cash. And one of the places where this excess cash has gone is the startup world. A lot of startups received funding, they raised capitals, and they were hiring people and they were giving bonuses. All the good stuff was happening in the startup world. Subsequently, where did these guys deposit the money? They deposited in Silicon Valley Bank. The deposits grew by 3 times. From $75 billion in deposits, that deposits number grew to $195 billion in roughly 2 years, 2 to 2.5 years. While the average growth in deposits in the entire US for all the other banks was 37%, these guys' deposits grew by 200%. That is massive jump. There was a lot of money that was coming in. Good times for a bank. Banks would love to have more money. Right? Then what triggered this entire collapse? It definitely did not happen in 48 hours. What was the sequel? What was happening behind the scenes? To understand that, let's start with the first fact. They did not have a chief risk officer from March 2022 till Jan 2023. 8 months. Their chief risk officer resigned in March 2022 and they took a lot of time to hire the next one. At the same time, the deposit base, they had close to $200 billion in deposit and that deposit base was falling down slowly. It came down to $175 billion in deposits by the end of December 2022. Well, if they would have had a chief risk officer in the boardroom, he would have been talking about, hey, this is not a good sign. But there was no chief risk officer and nobody was bringing up what could be the issues because of these things happening. So the deposits were going down. Well, the deposits were going down not because of the trust in the bank. You could notice in 2022 there was a funding winter in the entire startup world. And what does funding winter mean? Well, these startups were not receiving money from investors. They were not going to IPO, they were not receiving any money. So their bank accounts were getting empty. They still had to pay money to their employees. So they were taking money, withdrawing money from SVB, Silicon Valley Bank, but they never ever put back that money. So the total deposits were coming down drastically. And in the last 2 months, reports say that their deposits even came down from $175 billion to almost $160 billion. Massive. Close to 10% drop in deposits in less than 2 months. Now this was one of the trigger points. Well, this was happening over the last few months. But what changed in the last 48 hours? Because the deposits were going down, the bank had to do something. Well, if we take a step back, what do banks do? Banks take money from customers, right, and they give out small interest rates, and then they either give out as a loan to other customers or they invest that money in some asset. They have to, end of the day, make that money. Now these guys, a lot of money was there in the entire ecosystem, so nobody was taking loans. So they had to go and invest in government bonds, and those government bonds are risk-free, but they paid only little interest. This was happening in 2021 when the interest rates were low. Now the interest rates were low, they had a lot of money, nobody was taking loans, so they went ahead and invested in these risk-free assets. However, 2022, what was happening? The number of deposits were going down. People were taking away the money from the banks. So they had to take out these deposits. So they had to take out these bonds, and so that they can pay back the customers. But what happened in 2022, the interesting other element in the overall economy was the interest rates increased. When the interest rates increased, originally these guys bought the bonds for 1%, 2%. But now when they have to sell, nobody was ready to buy the bond because in the open market, the bond was giving 5% interest. This interest rates have increased in the last 1 year. So they had to sell the bonds at a loss. And that is exactly what they did. They still have to pay back the customers because a customer is coming and they are saying that, hey, I have to take out my money. And if more and more customers are taking out that money, they have to sell these bonds at a loss. And they did that. And they exactly released a statement on March the 9th, 2023, on Wednesday, Thursday. And the statement was this. They said that earlier today, Silicon Valley Bank completed the sale of substantially of its available for sale securities portfolio. SVB sold approximately $21 billion of securities, which will result in an after-tax loss of approximately $1.8 billion. So it was very obvious that they were selling these bonds for losses so that they can pay back to the customers. Absolutely nothing wrong. They had to do that. And as a good bank, they did that, and they also shared it with the people, and they released a press statement, and they also said that, hey, now we are at a loss, but we still need to pay the customers. So what do? We will go ahead and raise some money from the market. We will raise $1.25 billion through shares, and an additional $500 million we already got an agreement to raise from General Atlantic. Well, a great sign, because they already got $500 million. So the remaining $1.25 billion is a matter of time. That is what they thought. But the timing couldn't have been any worse. The same day they released this entire press statement, there was another bank in the tech ecosystem which was going down. They have announced voluntary liquidation. They were saying that, hey, we do not have any more money to pay the customers. And that bank is Silvergate Capital. So there was a negative news. These guys were saying they were running in losses. So customers came up quickly and they said, hey, we want to take money out from Silicon Valley Bank as well. And the problem is, since they were operating in such a small ecosystem of startups, when an investor sent out a note to all their portfolio companies that, hey guys, go withdraw money from Silicon Valley Bank, something wrong is happening over there, a lot of people came to the bank at the same time to withdraw their money. And that is called as run on the bank. And run on the bank led to more people coming in. This is a small system. People were living in Silicon Valley and they were waiting to take that money out. So they came up, they took that money, and subsequently they also told their friends. Silicon Valley Bank has only 30,000 customers who have more than approximately $150 billion in deposits. So it's a small ecosystem and they started taking money. Unfortunately, now no more money was left in the system. So they had to basically shut the system. And this is what happened with Silicon Valley Bank in just less than 24 hours. Now, is this the first time this has happened? Absolutely not. This has happened for decades. The first time this run on a bank where a lot of customers just went ahead and took out money because they believed that hey, the bank will go down. This has first time recorded was in 1600s. In 1656, after several attempts, Johann Palmstruck was given permission by the Crown of Sweden to start a bank. But unfortunately, he could not pay back the customers the money that they have taken for the bank, and they had to close operations because there was a run on the bank. And this is the first time this has ever happened, and there are multiple instances of this happening again and again and again. And in 1929, this has happened at the same time on multiple banks. That was the period of Great Recession. And you know what the government did after that? They formed an agency within the government and said that this agency will take care of all the customers in these kind of scenarios. And that agency is FDIC, Federal Deposits Insurance Corporation, and that is the deposit agency, and that is the agency which is now taking care of Silicon Valley Bank's customers as well. It is an agency that started in 1931. Now, if you think about it, this similar situations was about to happen in the 2008 crisis. In 2008 crisis, some banks did not do well. Some banks did well, but the government did not want a lot of collateral damage to happen at the same time. So they tried to manage perception through this way.
They said they have an idea. They want us to take this TARP money. You know, you're 25 billion, you're 10. On this basis, they calculated roughly 2%, I think, of risk-weighted assets. They also fully knew that some people did not need it, and there were a couple of people in that room who needed it.
Nobody wants to publicly take the money, because if anybody takes it, then the market says, well, they must be terrible. Let's pull everything out.
They issued bailouts to every single bank, even if they wanted it versus not, they didn't care. They just issued that money. And this was to manage perceptions and not let the people know which bank was really bad versus which bank was really good. This is a fantastic documentary. Please do watch it completely. Now, taking a step forward, what can happen? Going forward, more importantly, can India face any troubles because of what has happened with Silicon Valley Bank? This could have been a watershed moment for India if any private bank was exposed to Adani 2 months back. If Adani would have been exposed to, let's say, IndusInd Bank or any other private sector bank, there would have been a run on the bank for that particular bank. But fortunately, none of the private sector banks were overexposed to Adani, and hence we at least saved ourselves. And going forward, these things might happen, but right now the banking system within India is very well placed. The non-performing assets in the Indian market are very low right now. So the possibility of this happening in India is little low. But end of the day, as we can imagine, HDFC Bank, ICICI Bank, any bank in the world, if every customer comes in at the same time to take out money, that bank will go down. And that was the issue that Silicon Valley Bank had to face. Now going forward, Silicon Valley Bank is still a great bank to start with. It still has great assets under itself. So there is a possibility that the assets would be sold and the guys who are uninsured would be paid that money. Now FDIC will go ahead and pay back customers who had less than $250,000 in their deposits. But as we already talked about, more than 93% of the customers of Silicon Valley Bank have more than $250,000 in deposit. So what's going to happen to their fate? Let's look into a few customers or a few companies which are talking about how much money they have in their accounts with Silicon Valley Bank.
Rocket Lab in an 8K says that it has approximately $38 million with Silicon Valley Bank. That amounts to nearly 8% of the company's total cash and cash equivalents and marketable securities as of December 31st. And Roblox coming out saying that it has $3 billion of cash and cash securities as of February 28th, 2023. About 5% of that is held at Silicon Valley Bank.
Now, what happens to their accounts is anybody's guess. I hope they will cut back their money, otherwise this will lead to severe consequences. Now, what are some of the takeaways for you and me? The first one, when there is a bad time, even the most rational people on earth could take some very iffy decisions. For example, run on the bank, all the major investors were taking into consideration their own self-interest. That is the reason why they asked their portfolio companies to go ahead and withdraw money from Silicon Valley Bank. Otherwise, this wouldn't have happened. They had the money in long-term bonds. They could have paid the customers. But unfortunately, because Peter Thiel and other popular investors have asked their portfolio companies to take out the money, this is the result. And if we look back in the past, there was a very interesting incident when Mr. Narayan Murthy, founder of Infosys, he also asked his company Infosys to withdraw up to 1,000 crores from ICICI on a single day, because ICICI Bank was exposed to global markets in the financial crisis 2008, and there was a fear that ICICI Bank might go down. Hence, he was looking forward to his own self-interest and wanted to take that 1,000 crores from ICICI. By the way, he was also on the board of ICICI. So you can imagine, and you can't blame any of these guys because they are looking for their own self-interest. It is the money they made and they want to capture and they want to save that money. Now, the second thing which you should also learn is that this is very unlikely to happen for a bank like Bank of America or Wells Fargo or another big bank, because they are very well diversified. Silicon Valley Bank was completely based on the startup ecosystem. Well, they built a great business model, and that is the reason why they could survive 2008 financial crisis, they could survive 2000 dot-com bubble, but they could not survive this current recession or the current situation. Now, you as an individual or as a business, it's extremely important for you to diversify. And if you diversify, you are not necessarily exposed to or overexposed to risk coming from one single area of your business. And that was the issue with Silicon Valley Bank. It was their own business model, so nothing that they could do about it. And number 3, when you are trying to understand any global business, also look into what potentially can be the impact on the overall ecosystem, overall financial markets. Well, it is clear that, hey, this is now perceived, or people are believing that this is not necessarily going to impact the overall financial markets because this is an isolated event. But if this goes on and if the hell breaks loose, we are going in for a ride. And this might even come into and affect the Indian markets as well. Thank you so much, guys. I hope you enjoyed the video. You learned also a lot of things. Please go ahead, click on that like button and do give me feedback on what you liked about this special episode, versus if you want me to make any changes, I'll be more than happy to do that. Thank you so much. We'll see you again tomorrow. Bye-bye.